Interesting dynamics happening there in China's job sector. Well, let's chat more about it. Yan Liang, Associate Professor of Economics at Willamette University, joins us live from Portland, Oregon. Welcome back to the show.
Thank you, Rachelle.
So let's start with some background on the trends and the issues currently shaping China's employment picture.
So the recent employment data show that the employment has been quite stable. As you mentioned earlier, that the employment rate, official employment rate, stayed at about 4.8% back in November last year. But there are also many signs of declining, job opportunities in China. For example, the Purchasing Manager Index for the manufacturing sector dipped down below the 50 benchmark to reach 49.4. Back in December last year, and that's a clear sign of contraction. And that's on the one hand due to the trade tension with the United States and the declining export demands. But on the other hand, this is also a result of the longer-term structural and technological and policy factors that try to divert China from the investment-led, industry-based growth to a more service-based and consumption-based economy. Right. So I think these job losses should be read in a more balanced view.
So do you see these job losses from the manufacturing sector being redistributed in other areas of the economy?
Exactly. So the service sector has been rising, and it accounts for about 51% of the GDP and 45% of the total employment back in 2017. So it is an industry that has been increasing in its opportunities to hire workers. So I think, some of the job losses in the manufacturing sector, which, by the way, account for only 28% of the total employment, will be offset by the job creations in the service industries, ranging from the high pay, IT or financial services to the lower pay, lower skilled delivery couriers and in the hospitality industries as well.
And we are also seeing some workers taking their fate into their own hands, especially with the rise of the freelance market and the gig economy. So how do the employment needs and wants of Chinese millennials differ from the previous generation?
Right. So there are about 110 million gig economy participants as of 2018 by some estimates in China. So, freelance writers, live streamers, couriers, babysitters, pet sitters, what have you. So a lot of these jobs are taken by millennials who have the creativity, have the skills, and have the desire for flexible job schedules. And also some, retirees who are looking for some supplementary income. They also participate in the gig economy. By some estimate, by 2036, this industry is going to quadruple in China. So it will create a lot of job opportunities for people who are fit for this industry and have the skill and desire for it. So I think it helped to ease the pressure on the traditional job markets. But I think the regulations also need to keep up with these kind of jobs to provide necessary regulations and securities and protections to, right, to the participants. Yes.
So let's expand on that. What sort of policy support does the economy need then for job seekers?
Well, some labor laws, right, to protect the in your introductory sections, they talked about wage delays, deferments. So I think there should be necessary laws to be passed to protect these contracted workers and these part-time jobs seekers.
Now, given the economic slowdown, obviously the US-China trade tensions, you also have the rise of automation and these trends that we're seeing in the workforce. So what's your outlook for China's job market?
Right. So, it is a trend for technology progress to save labor. So that's why, as I mentioned earlier, that the manufacturing sector is going to account for a smaller and smaller share for the total employment. And therefore, we need to create more jobs in the service-based economy, places that cannot be simply replaced by machinery. In government jobs, I believe that the central government can also create jobs directly in some of the much needed industries and sectors, such as environmental cleanup, elderly care, healthcare, childcare. Some of those jobs are not sufficiently provided by the private industries or, by technology changes.
And just very quickly, we know that there's been rumors of massive layoffs at some of these internet firms, and some companies even rumored to be withdrawing offers made to candidates. And some of this, they're saying, is tied to the US-China trade war. What's really happening and why?
I think these are mostly rumors, like you mentioned. Some of the companies, the leading IT companies, have come out and denied mass layoffs. So companies like Weibo, like Qunar, Zhihu, some of the online platforms have denied mass layoffs. But I think some of these concerns are well-founded in terms of the health of the IT industries, because we have seen some changes, some interesting dynamics in the IT industries, especially in some of the subsectors, like the crackdown on the shadow financing industry that basically caused the collapse on to the online lending industry. The new passing e-commerce law back in August last year also tightened the industries and blow out some of the smaller e-commerce. But I think overall, this industry is still full of dynamics, and they're growing. And if you, for example, look at one piece of data, the online retail sales, it has grown by 27.7% last year compared to the traditional retail sales of 8% growth. So I think this industry is doing okay with their new regulations. It will just provide them with more healthy and viable environment to continue to grow.
All right, thank you so much. Yan Liang there, Associate Professor of Economics at Willamette University.